This conference will now be recorded.
So as you remember, last class period, we were working with this job order costing in-class example. And we had two items of ink. Our direct labor hours was 3 hours per book. Then our estimated overhead was $600,000. And we said if that was the situation, we did the calculation, the unit cost would be 68, our selling price would be 204, and our predetermined overhead rate 4. Are there any questions?
Can you repeat that? Because I just feel like, honestly, everything is just going way too fast.
Last time we began on this problem with direct material, ink 2 at 10, labor 3 hours per book at 12, and our estimated overhead was 600,000. So similar to what you're doing now with a quantity to be produced of 50,000 and a selling price multiple at 3 times the unit cost. We had to calculate the unit cost, the selling price, and the predetermined overhead rate. Our unit cost consists of, first of all, the direct material ink, 2 at 10, 20. Then for our labor, it took 3 hours to make the book. So we're going to multiply 3 times 12, and we're going to get 36. Then our overhead is simply the total overhead estimated 600,000 divided by the quantity 50,000 gives us 12. When we add 20, 36, and 12 together, we get 68. Since the selling price multiple is 3, 3 times 68 gives us a selling price of 204. Any questions? Okay, let's move on to the predetermined overhead rate. And in calculating the predetermined overhead rate, for our example, we changed it up, but we're just looking at the one on the left. We first of all put in our total overhead, 600,000. Then we put in our quantity to be produced, 50,000. We put in next our selling price multiple is 3. And since we have to make, it takes 3 hours to make one, we multiply 3 times 50 to get 150,000. Then our POR becomes the 600,000 divided by 150 to get 4. This is a number we're using a calculation to estimate the overhead as we're making the item. So predetermined overhead rate, the first item in here is the total overhead. The second item is the quantity to be produced. The third item is the productivity rate in making it, which is 3 hours. Since it takes 3 hours to make one, we multiply 3 times 50 and we get 150. We divide the first line, 600,000, by the fourth line, 150, gives us a POR of 4. Are there any questions? And we said that's how we start every problem. So once we've done that, we have the stages that we go through to record and post transactions. And these items basically never change in terms of the journal entries. The numbers do. So we formed this corporation investing $50,000 and we purchased $800,000 in equipment on a note. So we had to make a journal entry, debit cash and credit common stock for $50,000. That's what we formed the corporation with. That's always our first journal entry. Then we bought the equipment with a note. Debit the equipment $800,000, credit the note payable $800,000. Our third transaction in stage one is where we bought the raw materials. We bought 110,000 ink cartridges at $10 each. The entry is always debit raw materials, credit accounts payable. We got 1,100,000. How did we get it? We had 110,000 ink cartridges. They cost $10 each. And so the raw materials ink was 1,100,000, accounts payable 1,100,000. Any questions on the journal entries in stage one? Any questions on the journal entries in stage one? As indicated, the journal entries stay the same, the dollars change. Now in stage two, that's where we make the item. That's where we make the item. And three things happen. We transfer in the ink. We bought 110,000 ink cartridges. We bought more than we needed so that production wouldn't be hampered if there was spoilage. But we only transfer in 100,000 ink cartridges. We're told that the actual labor hours are 152,000. And our labor rate is $10 an hour. Then we apply the manufacturing overhead to those same 152 hours. But this is when we use that 4. When we estimate an overhead, this is when we use the 4, that POR that we calculated. So let's look at these journal entries in stage 2. We debit work in process $1 million, and we credit raw materials $1 million. 100,000 transfer in at 10. For the work in process labor, we debit work in process and credit cash. We multiply 152,000 hours times 10. Those were the actual labor hours. And then for the manufacturing overhead, we estimated that overhead to be 608,000. How do we get that? We multiply the 152 times the 4. 152,000 hours times 4. Are there any questions on any of those journal entries? Okay. In stage 3, where we finished last time, we said we completed 40,000 books. We said we completed 40,000 books. Since we were supposed to make 50 and we only completed 40,000, we would charge out all of the labor and manufacturing overhead, but only 80% of the raw materials. So at this point, we went to the T accounts. In the T accounts, we put in the debit for the raw materials. Then when we transferred it to work in process, we credited raw materials and debited work in process, giving us $1 million in the work in process for raw materials. And then the 1,520,000 and the 608. We simply posted those transactions in stage 1. But when we got ready to make the entry, we were supposed to make 50,000. We only made 40,000. So we do transfer out all of the labor and all of the overhead, the 1,520,000 and the 608, but we only transfer out 80% of the raw materials because the ink cartridges stay in here to be worked on next time for the next set of books. So we add 800, 1,520,000, and 608, and we get 2,928,000. 2,928,000 is what's transferred out. We had in there 3,128,000, and so therefore 200,000 is left in work in process. Are there any questions? Let's go back to finished goods. Now we had projected that our unit cost was going to be what we wanted it to be was $68. That's what we wanted the unit cost to be. And we use that to get our selling price. But it's when we incur actual costs, we got to go to, okay, what is the actual unit cost? And the actual unit cost that we're going to be utilizing in the problem is going to equal the actual cost, 2,928,000, divided by the 40,000 that we actually completed. So that's what we're going to do. So that unit cost is that we're going to be utilizing is going to equal $2,928,000 divided by 40,000. So the actual cost that we're going to have to utilize is $73.20. That's more than the 68 that we estimated. But that's what we have to use because that's how the cost ran. So 73.20 is going to be the cost that we're going to utilize. Because we have now to move on to stage 4 where we sell the item. So it says in stage 4, we sold 30,000 books.
Can you go to the finished goods real quick?
Go where?
To the finished goods.
Okay. What happens with finished goods is that, and once again, when we finish today, I'll send an updated version. But y'all see what the actual costs are. And we didn't make all of our books. We were high on the labor and overhead. And so we just simply, that 2,928,000 that we transferred in, we divided by the 40,000 books that were actually made. And so rather than the $68 that we had planned, our cost becomes $73.20.
Got it. Thank you.
You're welcome. Now, when we get to stage 4, it says we sold 30,000 books. we sold 30,000 books. And so assuming these were cash sales, as we get to stage 4, what's our journal entry going to be? First of all, we're going to debit cash, and we're going to credit sales. We sold 30,000. What's our selling price going to be? It's going to be the number that we calculated, 204. So we're committed to that number no matter what the costs are. So that's why we have a multiple there. So if we multiply 30,000 times 204, we're going to get sales of 6,120,000. We also need to record cost of goods sold. So we simply debit cost of goods sold, and we credit what? Finished goods. So if we sold 30, we need 30,000. We need the cost for 30,000. What cost we're going to use? We have to go back and use 7320. We have to use 7320 because that's what the costs are. So we multiply 30,000 times the 7320, and we get 2,196,000. So we get to 2,196,000. So we have to get to 2,196,000. We have to put that credit in here, 2 million. So we had 928, 2,928,000, and it's 2,196,000. So we have 732,000 left in finished goods. 732,000. And so we're going to come in the cost of goods sold and put the 2,196,000. Let's go ahead and put our sales number in, which is 6,120,000. Now you will remember we made an entry debiting work in process for 608,000 and credited manufacturing overhead for 608. So we're going to put that posting in here now. Now let's go back to our problem. And what we got to do now, we estimated the overhead, but now we got to record the actual overhead. And it says that the actual overhead was depreciation 160, other overhead expenses 450 that we paid in cash. And so our journal entry now, 60, so the accounts that we're crediting are going to be accumulated depreciation, and cash. We're going to debit the MOH account for the actual overhead. So when we add these together, we get 610,000. So we're just, looking at the managerial part of this now. And so we have to debit manufacturing overhead for 610,000. So our estimated overhead was 608,000. The actual turned out to be 610. And so we got to close out this account. And what we're going to do to close it out, we're going to credit the manufacturing overhead for 2,000. That will close it out. And since we didn't charge enough overhead, we're going to go ahead and debit cost of goods sold because we didn't have enough cost in there. We made our best estimate. We didn't have enough in there. And so our adjusted cost of goods sold now is going to be 2,198,000. Okay, 2,198,000. So this is sort of a clearing account, and then we close it out. Actual estimated, since we were under, we have to debit cost of goods sold. If we had too much, if we had put 615 as the estimate, then the journal entries would be reversed. But for now, we're going to make this journal entry to record the underapplied overhead. We're going to debit cost of goods sold. We're going to credit MOH for the 2000. Then we had, items that you're familiar with. We're in the stage 5, selling and administrative expenses. So we're in stage 5 now. And it says that our selling expenses are 20% of the sales. So if our sales were 2,928,000, excuse me, 6,120,000, then our selling expense is going to be 20% of this number. And so we're going to debit selling expenses. Hopefully you're seeing now where you need that multiple, because you've got to cover these costs. Our selling expenses, and we're going to credit cash. And the number that we're going to be using is going to be the sales, which were 6,120,000. Times 20%, 0.2. And that's going to be 1,224,000. So that's a fairly easy calculation. $1,224,000. Next, we record our administrative expenses, which were $1 million, and dividends 50,000. So we simply would debit administrative expenses for $1 million. We're going to credit cash for $1 million. Our dividends were 50,000, so we're going to debit dividends. And credit cash for 50,000. So we're finished with the problem now. So you don't have a lot of journal entries, and all of these accounts will stay the same. All of these journal entries will look just like this. The only change would be if we overestimate it, then we have to switch these numbers. We would debit MOH and credit COGS. And what you have to remember is you're going to make this journal entry. You're going to make this journal entry so that this T account always ends up at 0. So the number for the over under plat is always on the side where when added to that side, it equals the debit. So the debit equals the credits. And this account is closed out.
And did you say we flip them if we overestimate or underestimate?
If we overestimated, say we had 615,000, we would overestimate it. So we'd have too much in the cost of goods sold, so we would flip it. So if we had estimated the cost to be 615,000 and the actual was 610, then we got to put the 5,000 over here.
Okay, got it. Thank you.
So now we would debit MOH, credit cost of goods sold, and the 5,000 would be over here. Any other questions?
What was that last journal you put in? It was debit dividends and then credit what?
Cash. That's a standard journal entry. You're familiar with that one, correct? Good. Okay, so the next thing we have to do is to make or prepare our financial statements. Cost of goods manufactured, cost of goods sold. We've got to prepare these statements and then the income statement. Now, cost of goods sold, we're working with dollars, but it's still direct materials, it's still direct labor, and it's still applied manufacturing overhead. Okay? Okay, so let's see how we're gonna get our direct materials. We're gonna come to the T account for direct materials. We bought 1,100,000, is 100,000 left. 1,100,000, 100,000 left. So in preparing the schedule, we didn't have any beginning inventory. So we purchased 1,100,000, correct? Our raw materials ending was 100,000. And so the raw materials used in production is $1 million. So that's the first number. That's your raw materials. Then we need the direct labor. And the manufacturing overhead. If you will remember, in stage 2, we said the direct labor was 1,520,000 and work in process inventory was 608. So 1,520,000 and 608. A million 608. So we're essentially taking the journal entries. We're taking the journal entries that we made in stage 2. We add the 1,520,000 and the 608. If we add those numbers up, so it's going to be 2,000,000. 3,128,000 was the total manufacturing cost. 3,000,000. We didn't have any beginning work in process inventory, but you had an ending work in process inventory. So we're going to go to that T account for work in process, and it says 200,000 was there. And what you notice too is those numbers are in this T account. So the ending work in process inventory is 200,000. And so therefore, cost of goods manufactured is 2,928,000. It's going to be 2,928,000, which is that number we transfer here. So you already got the answer in terms of what's the answer going to be to the cost of goods manufactured. It's this number that we transfer to finished goods, 2,928,000. Any questions? These
We
columns.
could we could just subtract the manufacturing cost with the NWIP, right? To get that 2 million.
Say that again.
We just subtracted the manufacturing cost from the NWIP to get the cost of goods manufactured.
The ending work in process. Our total cost is 3,128,000. The ending was 200,000, so cost of goods manufactured was 2,928,000. Your T account has all the information you need. Cost, total cost, in the inventory, and what's transferred out. It has it there. So if your journal entries are right and that T account is there, then you're in good shape. Any questions? So this becomes your first new statement that we're doing. Cost of goods manufactured. It is simply raw materials, direct labor, and applied manufacturing overhead that is in this T account, the work in process T account. So you get that T account done, then you got the statement done. And so what the statement just tells us is what was our total cost to make the items. Now let's go to our cost of goods sold statement. A simple statement, finished goods inventory beginning. We didn't have any beginning inventory in our finished goods. So it was 0. Then we're going to bring down the cost of goods manufactured. So the 2,928,000, we're going to copy it, put it right there. Now we got to subtract out the finished goods inventory ending. to get our unadjusted cost of goods sold. So if you remember, our finished goods ending was 732. Then we simply subtract cost of goods manufactured, reduce it by the ending inventory. So our unadjusted cost of goods sold is what, 2,196,000, I think is what we calculated. 2,196,000, which is what we transferred the cost of goods sold. 2,196,000. We add under applied or we deduct over applied. So we under applied it by what, $2,000. Remember in the account, we under applied it by 2,000. And so our adjusted cost of goods sold, we're gonna add the 2,000. And so it's gonna be what, 2,198,000, which is the balance in the cost of goods sold account. It's there in the T account. And so we can do this income statement and we'll be done. Our sales were what? We could put it in, you could put it in the T accounts here, but here it is, 6,120,000. So we're gonna put 6,120,000 here. We're gonna subtract this adjusted cost of goods sold. And so therefore, our gross margin is 6 million minus the 2,198,000. Look like that's 3,922,000. So let me look at that again. 6,120,000 minus 2,198,000. 3,922,000. We had selling expenses and administrative expenses. If you remember, the administrative expenses were $1 million. Then the selling expenses was $1,224,000. So when we total these expenses up, we got a 2 million, 224, and so our net income 3922 minus 2224. 1698. Yeah. So let's see what we've done in our little problem here. We started off with our assumptions. We calculated unit cost, selling price, predetermined overhead rate. Then we made journal entries in stages 1 to buy the raw materials and sell it to the company, stage 2 to make the product, stage 3 to transfer the finished goods, stage 4 to sell the items with 2 journal entries, as well as record the actual manufacturing overhead and the under applied overhead. Then in the stage 5, we record the selling expenses and administrative expenses. Dividends is not a cash, so we don't put it on the income statement. We did these postings to these accounts, and we said, key accounts, work in process. It gives you that first statement you got to do. Cost of goods sold gives you that next statement. And so we prepared the cost of goods manufacturer statement, raw materials, labor, and overhead. And we said this number is always what we transferred to finished goods. So whatever we transferred from here to here, that's the answer to what cost of goods manufactured is. Cost of goods sold, fairly simple. We bring down the cost of goods manufactured, subtract the finished goods inventory to get the unadjusted. We either add or subtract the over or underapplied 2,000, get the adjusted cost of goods sold, and then we do our income statement. Sales less cost of goods sold, gross margin, less selling and administrative expenses, net income. Are there any questions? So you now have your midterm exam. You have your midterm exam. When are you going to be ready to take the midterm?
End of March.
In the when?
March.
So we're going to work during spring break or something? Okay, so you have in your homework, if I can find it, a problem that you've got to work. Let's see, managerial accounting. It's the one we had in there before. Costing. Nah, that's not the one I want. So this is that first in-class problem that you had. So as we begin to work, so we'll be ready to do the midterm. We start with just the accounts and calculate the cost of goods manufactured table. So you got the chart on how it works. All the work is done here. You just got to put the accounts in the right place. Then do your cost of goods manufactured table and answer these multiple choice questions. So to answer these multiple choice questions, you probably also need to do uh, COGS table and your income statement. So that would be good practice. Now this is team, but the way this needs to work is everybody work it and then you compare answers. Okay, that's what you need to do because everybody has to eventually be able to do this. So team leaders have everybody work on it, submit it, then you all submit me one correct one that we will review next time. So you got your multiple choice question to go with it. Then you have a job order problem, similar to what we just worked, except now you've got two raw materials. Some of the same thing, you got to calculate selling price. So you're going through the whole thing now on this problem.
Will this recording be uploaded to your YouTube channel?
Of course, are you going to listen to it?
Yes.
Okay. So for next class period, we'll make some assignments. So this is team one, cost of goods sold is team two, income statement is team three. Okay, on this problem. So when you come to class, you're putting it up and answering your related multiple choice questions. When we get ready to work on the long problem, unit cost team one, selling price team two, fuel R team three. Stage one, team one, stage two, team two, stage three, team three. And we come back to team one again. Then two, that's this. And then cost of goods manufacturer statement, team one, income statement, team two, now you have your homework credit, but only half of that's what you submit in Blackboard. The balance of your credit is going to be based on what you present in class on Monday. Any questions? So you should be now going to your Excel spreadsheet learning to put formulas in so your work is easy. And if you have to make any adjustments, it's easy. I just sort of gave it to you in Word so you could see it. But you sending me Excel spreadsheets on Monday. That's clear? And that will help you because when you do the midterm, you'll be completing an Excel spreadsheet.
And is only one person turning it in, or are we all turning it in?
Just one person needs to turn it in on the team. But like I said, only half your points is based on what you turn in. The other half will be based on uh, what you present. So probably you get 10 points for what you turn in and another 10 for what you present in class. Okay? So I think I had it as a 10-point assignment, but it's enough work that would make it a 20-point assignment. Then on next Wednesday, teams will be in their rooms and they're going to work a quiz problem as a team in their room. So you'll be in your room on next Wednesday working the problem out. So we got the class working it now. On next Wednesday, each team will work it. Then on the following Monday, each individual works it. On the following Monday, each individual work it. Then by that Thursday, we should be ready for the midterm. So that's giving you a look at what we'll be doing over the next 2 weeks, which I guess takes us in the midterm, doesn't it? In spring break. So at this point, let's just assume that Wednesday of spring break, the Wednesday before spring break, we'll do the midterm. And if you mess it up, then we'll talk about what you're going to do then. But if you get it right, then you're okay. Otherwise, you might owe me some spring break time. So work now so you can have your spring break clear.
Are you going to be offering any extra credit?
Of course, I always offer extra credit, Ebony.
Multiple extra credits?
Sure. Multiple extra credits. So essentially, you see how your exams went. So I can tell you what your extra credits are going to be. I'll have about, so Savian says she needs a lot of extra credits. Okay. There will probably be, I don't know, 8 to 10 exams. Let's just say 10 for good measure. So everybody will have an exam, 1 through 10. Maybe be a couple of people on it. So if you mess up, then on spring break, you get 2 points or whatever I come up with for each extra exam you work. So if you messed up or you need extra credit, then on your spring break, since you didn't do your stuff before the break, then on the spring break, you have to work all of those 10 exams. So you only got 1 to do for the midterm. So I hope this gives you a motivation. Work hard, do well, blah. But if you don't do it, then you have to work each one, and the more you work, the more credit you get. So you can get all of the extra credit you want and need. Okay?
No, I meant like lectures, like a presentation in the auditorium. Do you have any of those?
No, I don't have any of those. I just have work. I don't know. We'll see. We may have something. We may. Okay. I'll work on that. That's a good thought. I'll work on
Thank you.
easier one where you attend a certain presentation. We'll get points for that. Any other questions?